Stop believing the IPO hype. Seriously, if you think SpaceX is just a rocket company, Goldman Sachs is about to tell you you're off by a factor of 100. Here is the counterintuitive truth that the prospectus won't put on the cover. Goldman expects SpaceX's AI division revenue to grow 100 times by 2030. From $3.2 billion in 2025 to an astounding $322 billion in 2030. That's not a typo. Total SpaceX revenue is projected at $474 billion by 2030. The biggest IPO in history is set to raise $75 billion with a valuation of $1.75 trillion, trading starting June 12. But Morningstar claims the valuation should be $780 billion, less than half. One of them is wrong. Let's break down both sides of this debate and stay until the end, where I'll share 3 secrets that will change how you view every Elon Musk company IPO. I'll admit something. When I see a $1.75 trillion valuation, I get skeptical. I often think, another bubble. But then I look at the AI revenue forecast. This isn't a normal IPO. It's a bet on Elon Musk's AI empire. Today, we'll explore Goldman's forecast of $322 billion for AI, Morningstar's $780 billion valuation, the IPO timeline, the underwriters, and the risks involved. By the end, you will understand why smart money is split. Stay with me. Let's start with Goldman Sachs' forecast. They project SpaceX AI division revenue to grow from $3.2 billion in 2025 to $322 billion in 2030. That's a staggering 100-fold increase. The total SpaceX revenue expected to jump from $18.7 billion to $474 billion in just 5 years reflects a 25-fold growth for the company overall. The counterintuitive truth here: Goldman is not betting on rockets alone. They are betting on AI. An incredible 93% of SpaceX's $28.5 trillion total addressable market comes from AI, not space. The rockets are the story, but the AI is the business. Now let's discuss the IPO logistics. The company aims to raise $75 billion, marking it as the largest IPO in history, with a valuation of $1.75 trillion, positioning it among the top 10 U.S.-listed companies by market capitalization. The share price is set at $135. The timeline is tight. The roadshow starts today, pricing occurs on June 11, and trading kicks off on June 12 on Nasdaq. Major Wall Street banks like Goldman Sachs, Morgan Stanley, Bank of America, Citi, and JPMorgan Chase are backing this venture, indicating confidence in the potential profits. If these top banks are betting on SpaceX, perhaps they know something we don't. Now, let's look at the bear case from Morningstar, which values SpaceX at $780 billion, less than half of the IPO target. Why the gap? Morningstar expresses skepticism regarding the AI business dynamics. They raise questions about whether XAI can capture market share from competitors like OpenAI and Anthropic, and wonder about the value of user data from X, formerly Twitter, for AI training. The bears concede that SpaceX's rocket business is valuable, but they just don't believe the AI narratives justify such a lofty valuation. Understanding the components of SpaceX's AI division is crucial. The division consists of XAI, which includes initiatives like the Grok chatbot, and X as a significant data source. X provides real-time data necessary for training AI models, while XAI constructs these models. The challenge lies in competition. While OpenAI has Microsoft and Anthropic has backing from Amazon and Google, XAI relies on X and SpaceX's resources. Musk's integration may serve as a competitive advantage due to the vast data from X, but the question remains: is this AI division worth $322 billion in 5 years? To connect everything we've discussed, here are 3 secrets. Secret number 1 is the 100x growth gap. Goldman predicts 100-fold growth, Morningstar presents a valuation half of the IPO target. This isn't a small disagreement, it's a significant divide. Secret 2 is the confusion between rockets and AI. SpaceX is known for rockets, yet Goldman asserts the real value lies in AI. Finally, Secret 3 revolves around the IPO timeline pressure. The timing is crucial. Institutions are making decisions now, with intense FOMO likely to ensue around the IPO. It's essential to do your research before June 12, as emotions will dictate actions once trading begins. So, what should you do with this information? If you're considering buying the IPO, understand whether you are investing in rockets or AI. Goldman believes it's AI. Morningstar argues it's about rockets. If you're an index investor, be aware that SpaceX will enter the Nasdaq 100 shortly after trading begins. If skeptical, it may be wise to wait. Let the initial earnings reveal the truth about XAI's growth. Remember, the best time to buy SpaceX might be after the IPO frenzy fades, with patience proving more profitable than emotion. Now, here's my question for you. Do you trust Goldman's $322 billion AI forecast or Morningstar's $780 billion valuation? Drop your thoughts in the comments. I read every single one. Like and subscribe for more analysis on the biggest IPO in history. I'll see you in the next video.